Hey guys, happy Friday, Shane here, and I wanted to welcome you to this video. It is going to be a boring one for a lot of you that are out there, so some of you will have the patience to watch this minute by minute, right to the end, and if you do, I promise you, you will learn something. There's a few golden nuggets hidden in there, and for those of you who skip through it, you might miss some of the golden nuggets I have in there for you. But anyway, it's a tape reading exercise. You're going to be behind me, looking at the chart, candle by candle, explaining where I think price is going to, what to look out for, and there's a few hypothetical trades in the video as well. So today was Friday, it was non-farm payroll, so this causes the market to go berserk. So I pick up the video, it starts from after the non-farm payroll was released, and I explain the moves and where price is going, where I think it's going, and all of that. So enjoy the video. It is a bit long, so brace yourself for it, and speak to you soon. Have a great weekend. So just look how violent this move has been. So this happened at 8:30 a.m. New York time, which is 1:30 p.m. here in Ireland. Price moved down, took out sell side below the market, and literally has just rocketed up here. Okay, so a strong bullish move. So it's very important to not be in a trade before the news, or you can literally get yourself destroyed. So looking at this here now, I had my sell side below market, I had buy side here above market. We've just broken that, and it doesn't look like it's a small break with potential reversal. It's a strong move up. So it's more likely, if there is going to be another setup today, that it'd be some form of retracement of this move, possibly. We'll have a look now at the 5-minute chart. You can see it's been such a strong move up. We've had a move of about 55. It's about 65 pips of a move there, which is very violent in such a short period of time. Zooming out to the daily chart, you can see on the daily, we had a fair value gap here previously. Price this week moved down into that fair value gap. 1, 2, 3 candles, and we've turned here to move higher. So potentially we could end up that liquidity is above this candle's high here in the daily. So price could move up and try to test that level above market that I've marked in blue. That's one possibility here. So if you look at that in a 5-minute chart, there's that blue line above market. We could have a draw of liquidity up to there. Now, is there a potential entry on this? There may or may not be. Price could just keep moving higher and higher and just get there, and that's it. Possibly there could be a retracement. If there was going to be a retracement, I'd be looking at absolute swing low to the absolute swing high. Just see where that 50% is lining up. You can also see, if you zoom in, there's an order block here, that black candle. Price moved up, pulled back here, strong move above, order block high. We also have 5-minute fair value gap between this candle's high, this candle's low. So that's a fair value gap there in the 5-minute chart. You can see now we're getting a little bit of a retracement. So let's just observe this, see what happens. Time now in New York time is 8:55 a.m. Let's go to a 1-minute chart. Price has been very aggressive here. You can see right now this candle here traded into a 1-minute fair value gap here and has moved higher. Now I would not be taking a long here personally myself. We may potentially see something like this happen. Price could break this high, possibly come down and break this low, and we may trade back down towards an area of value down here before possibly resuming trend. This could be a scenario, or price could really just keep moving higher. So when it's unclear, there's nothing to do. You know, price could just continue moving higher like this. We just have to observe price and see what potential opportunities it gives. The market will tell you exactly what it's going to do. It'll show its hand, and it's up to us to be patient enough to wait for that moment. So the hourly candle is about to close. So have a quick look at this hourly candle. You can see the dollar index has moved lower here as well, which aligns with this move higher. So they tend to move in opposite directions, the dollar index versus the euro dollar. So that's the hourly close, well above this buy side level. This swing high over here would be the next important level as the potential draw on liquidity, which we've mentioned. It's a Friday, and Friday can be a pretty dangerous day to trade even when there's no news, because a lot of the really nice, cool, clean setups can happen usually earlier in the week, especially Tuesday, Wednesday, Thursday, when the heavy lifting is really done, I believe. We'll be curious to see, though, if price does something like this, if it kind of retraces back down, looking at these highs here to potentially move higher. And we may see this turn on a lower time frame. If it does turn, you'll see it on a 1 minute chart. So on the 1 minute chart here, do we see the trend change? So we're just doing tape reading. We're just studying price, looking at how it moves. High, low. There's a lower high here. This is a fair value gap. Sometimes what can happen is we may see an inverted fair value gap happen. If, for example, if price breaks down below this fair value gap, we may see it being used as resistance possibly for a move lower, although price is looking pretty strong. So there's nothing to do, folks. From a psychological point of view, there are a lot of people who try to pick tops. So sometimes when these black candles start forming, some people start shorting. And if you're going short, where's the stop loss going to be? It's going to be above this high. So if you were going to short or fade this move, you like to see these highs broken. You like to see people trapped. So something like this, and then a break. That would be a nicer setup. Break at the highs, break low, pull back. That would be a nicer short potential setup than kind of just breaking below here. But definitely now the trend is bullish. We've moved up, we've pulled back. We've moved up. A little pullback, and there you go, we've broken the highs. So the trend is continuing. But with that break of high right there, a lot of buy stop orders could be triggered. So smart money might be getting in there for a potential short, possibly. But we can only confirm that if we get a breakdown here lower. So let's see what happens. There's a draw on liquidity above market, and she's on a race. She's racing there. Let's have a look at the 5 minute. So you see these highs. Price wants to go there. We've this 5 minute order block. That's an order block. Price could come down, bounce here. That's potential. Just studying price, ladies and gentlemen. So even when you're not trading on a trading day, it's good to study price, see how it moves. Because obviously this little order block here, price didn't come back to tap into that. It's moving very strongly. Stalled here a little bit more, moved higher. We could potentially bounce there, but then we could fail as well. So, you know, anything can happen. But I'd like to see something happen up here potentially. So I'd say a lot of traders are just jumping on this long. It is interesting if you look at this 5 minute chart prior to the news at 8:30. Okay, see there's a number of lows in here. We got a low here, we got a low here, relatively equal lows. We got a low over here. So if we just mark that up, see our price at 8:30, literally from here, dipped down, took out the sell side liquidity, stacked up a huge long position, and then boom. So the initial move was lower, faking a lot of people out who might have sold short, and then reversed nearly instantly to take out the buy side. Let's have a look at the daily chart. So as I mentioned, draw the liquidity. This candle is high. It looks like we may get up there. If we break through there, where would the next draw on liquidity be? Well, we've got these two candle highs, and also there's a wick here as well. So potentially the midpoint of this wick, the consequent encroachment of this wick, could be another location where price may want to draw to next if it breaks the highs and wants to keep going. But that's been a fairly large move there today. Let's measure it. So from low to high, we've moved about 85 pips. So here we go, guys. Price has now technically broken into the buy side above market. We'll move to a 1 minute. So we could take a potential short if we got a setup up here. But at what point would a short become valid? Well, you can see in the 1 minute chart, we've been obviously moving high, low, higher, high, higher, low. We really would like to break below this low here quite aggressively before you would consider a potential short. So let's see if that transpires here. Just jump to a 4-hour chart here. So you can see we broke that high, spiked in, moving lower as expected there. So that's a buy side level taken after a huge run up. So let's see what happens here. It's very important, if you're ever going to take a short setup, you always wait for your setup. So what could happen here is this could just blast higher from this point easily. There's nothing to say that this is going to turn here. There's no reason. There's potential that it could turn, and it is a good location for price to turn and possibly move lower. But the market is telling us we're in an uptrend. So we could break this high again and keep moving higher. If you look closely here on the left on this 1 minute chart, we do have a fair value gap between this candle's high, this candle's low. Price moved up, pulled back into the fair value gap, moved higher. Time now is 9:23 a.m. in New York. So if I draw another vertical line here at 9:30, which is here, that's the US equity market open. So we should expect a bit of volatility around this time. So I wouldn't, even if I did get a break in structure here and potentially considering a short, I would never take a trade before the 9:30 open because you can spike either side. So really, if we're going to take a trade, we want to be after the 9:30 open. Now, is this a structural break? Some people ask. Because we made a higher high, low, lower high. Is this a structural break? Technically, it's like a head and shoulders pattern. It is, however, a better structural break is a break at the high, then a break at this low. That's a better structural break. So this kind of thing here, often many times you may see a move down, take out this little sell side here, and then price trick a few people that is going short, and then price continues higher. Let's just be careful with this kind of situation. This is why displacement, boom, you want to see big displacement candle if you're in this kind of situation, if you're considering an entry with a lower high to the right of a higher high. A few golden nuggets for you there, guys. See, we've just wicked out this low. Some people might be going short here. and it could bounce higher. Tape reading, guys. This is tape reading. Do this for hours and hours every single day for a few years. And then you start getting a really good feel for market movement. Also, this fair value gap here that you see in the 1 minute, it was not filled completely with this little candle. It was filled with this one. So smart money may be accumulating long positions here for a break of this high. The candles tell a story. It's a story. Now you see price breaking this high here, targeting the highs and the very high here. 2 minutes away from equity open. Now I know I'm very zoomed in here, but we know where we are. If we go back to an hourly chart, we zoom all the way back out. Boom. Look where we are. Broke this high, wicked up, and we're in here with our magnifying glass on the 1 minute. Boom. Seeing what's happening at that line. That's how the market's fractal, you know. You see one location, and you zoom, it's like having a microscope, and you zoom in closer and closer and closer, and you see what's happening. And then you zoom in closer and closer, and you see what's happening. Zoom in closer and closer. I'm excited to see what's going to happen here at 9:30. Let's have a vote. Are we going to break this high? Okay, it's 9:30 a.m. New York Open. Stock markets are now open. See the way we were not caught out by this. It looked like the trend was changing, but it didn't. Now, see that candle, has it broken the high here? I'm just going to delete the vertical line because we know that the US markets are now open. Okay, we've just, the highs are equal. 10470 high. So we have equal highs here. Oh, now we've broken the high. And look at that. So anybody who tried to short over here is after getting their ass handed to them on a plate, a golden plate. See, the break high here, some people will short right here with the expectation that we're going to break. But that's very high risk because price can keep making new highs and new highs and new highs and burn you and burn you and burn you and burn you. So although you feel like you're getting a bad price, waiting for it to go down here, waiting for it to pull back, and you're getting the confirmation of the trend has changed. You have to get the confirmation that the trend has changed because there's other people who are buying. There's people who are buying here right now and they're putting their stop down here below this with the hope that this is going to continue higher. That's what some traders are doing right now. What are other traders doing? Let's get the sell. Some people are shorting right here. I'm going to putting their stops just above that high. Oh, I'm going to make a lot of money here. And then price will move up and just break that high and drive them crazy. And they think they're saving money by having a smaller stop. No. It's better to wait for price to break all the way down here. Get a nice close down here, pull back. You know. Yes, it'll be a wider stop, but the probability of it moving lower is much, much, much higher. Golden Nuggets Friday. Time is 9:34 a.m. As you can see, price moving higher. Is it going to break this high? Quite likely. How would you feel if you were that guy who's short? And you're here, oh, you just got, there you go. Your ass handed to you again. That high broken. If you were short, trying to get a tight stop, looking for a move lower, and then, stops you out. Not much happening here, folks, is there? It's 9:45 a.m. New York. Let's have a look at all the different time frames. So we'll have a look at the 5 minute. Okay. 15 minute. Okay. 30 minute. 1 hour. Yeah, so we're still trading above this high. Daily. Sugar. Daily chart. Price might want to go up to the midpoint of this wick here. So it might want to go up to that red dotted line, possibly. Let's look at the weekly. So that weekly candle quite interesting now. If we close like this, from a weekly point of view, our trend, we're in an uptrend on the weekly, aren't we? If you look from here, high, low, higher high, higher low, higher high. Is this a higher low? On the weekly, could we have a move like this over the next couple of weeks? If that candle closes like that, there may be potential for price to move higher. But the week's not closed until the week is closed. That candle could end up being down here by tonight. So we only do our analysis on the weekly and the daily after the candle is closed. Back to the 15-minute chart. Real trading is sitting for hours observing price. We definitely have a slow of momentum here. What do I mean by that? Momentum is when price is really moving like a car with the gas down, foot pedal to the floor. When you see the size of the bodies, look at the size of this body of this candle compared to previous candles. We had huge momentum, relaxed a little bit more momentum, and then huge momentum. And now we're kind of getting a bit tired. Oh, I might just go home. And price just pull back. Okay, let's really zoom in here. 3-minute chart. The low of this candle here. I'm going to pull back, move higher. To consider potential short, price would really need to break below this low. So there's obviously a lot of stop losses. If you were long, if you can imagine, where would you have your stop loss? If you bought down here and price moves up, pulls back, moves higher, you move your stop loss under here. If you're long, if price moves up, pulls back, moves higher, you move your stop loss under here. This is where you can find your sell side liquidity, by thinking about the longs. Price moves up, pulls back, moves higher. I'll move my stop loss under this low. So there's a lot of stop losses under this low, I would imagine. Move up, a little bit of a pullback here before moving higher. There could be stop losses under here, but a lot of people don't put them too tight. So the majority of stop losses will be down here. So to see price come down and close below here, you could potentially have a short. To see price come down, just do a little wick and bounce, we could have a long. So this is what the video is, guys. The boring video. Tape reading. So let's say, guys, you're at home and it's Wednesday, Thursday, Friday. You're kind of looking to potentially take a short. You're waiting for an area to break. On TradingView, if you just right click, add alert, create. See that dotted line? When price hits that dotted line, my computer will make an alarm. Once I have the volume up, is price running out of steam? Another thing as well to consider, why is there potentially a short opportunity here? Well, if you look at anyone who is long, also because of the day of the week, anyone who's been long here, obviously they have to take the profit at some point. So what's going to happen towards the end of the day is that people are going to start selling to close their long positions. So you might see price start moving lower. Not really now, because it's only like 9:52 a.m. in New York. Kind of in the afternoon session it could happen. The price will kind of top and kind of pull back. Let's go to the 1 minute. Be very careful with 1 minute trends. It can be very dangerous. You can't really trust these. That's a high, low. We broke. Like there's a fair value gap there. you could potentially say that, okay, we've had a move higher here on a 1 minute. We've had a pullback. We've had a lower high. We've had a break. A little bit of displacement. Pull back into that fair value gap. Is this the setup that'll move us lower? Fair value gap, 1 minute. Fair value gap short. That's why I make it red. Let's just study this. That's what we're doing, guys. We're studying the tape. There's some people would take a short here. Right here. Stop above the high. Can they get a move down? Now, I'm not taking any trade. I'm not saying that this is a trade. I'm just reading the tape, studying, is this a potential short? Right here, right now. 45. It's about an 8 pip stop. But really for this, that's a 1 minute kind of a little mini trend break. But if you look at this in a 5 minute, there's nothing there to say that this is a downtrend. So people say, do you trade the 1 minute or the 5 minute? Well, it's safer to trade the 5 minute because we could literally move higher here, even though there was a trend break on the 1 minute lower. A safer short would be for price to come down here and break the 5 minute trend. So you have to study this yourself, see what works for you. It's kind of a slow time of the day here. You can see prices moving very slow because it is Friday, it's the end of the week. Will this be the little short that moves us down lower? So some people would short there. Price breaks the 5 minute, pulls back, add another position. So they have 2 positions, run it short. So let's go back to the 1 minute. Okay, you can see now we're getting a bit of a turn here. For me, this is not boring. This is exciting. It's interesting. It's like meditation. It's very relaxing, I find, studying this. For some people, it's like watching paint dry. 1 minute fair value gap. Okay, where's 2-hour trade? Here. Risking 8 pips. Will it hit this low here for a 2-hour trade? I'm not in the trade. It's just hypothetical. But doing this each day would definitely give you a lot of chart reading experience. And because of the fact I'm not in a trade, I'm very relaxed. So then if you practice doing this, sometimes when you're in a real trade, you'll still have that relaxed feel by analyzing the market. So let's imagine we're trading this, okay? Price has broken this low. Oh, let's move our stop loss down. Beep, 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 beep. Let's tighten our risk. 4.5 pips stop. Do. Can we break lower? Tape reading, tape reading. Tape reading Friday. Some of you guys like going out and partying on Friday. How about having a tape reading Friday? Isn't that more exciting than going out to the pub and meeting your buddies? Oh, look at that. Oh, price moving down there nicely. Let's move our stop loss to break even in this hypothetical trade. Beep, 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 beep. Okay, our stop loss is at break even. Ooh, she's looking a bit bearish. So we're on the 1 minute chart, guys. What does it look like in the 5 minute? Remember the 5 minute. What did it look like? Try to visualize the 5 minute when you're looking at the 1 minute. What should that be looking like right now? So now let's jump to the 5 minute. Oh, look at that. So now you have another bunch of traders. The 5 minute traders are looking at this going, oh wow, if this breaks this low here, I might have a setup short. Now that's our break line. So we've just broken that. See the way I've got my alert? Bing, 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 bing. So now we've broken the 5-minute trend. Now what? Let's go back to our 1-minute chart. We're going to hit our 2-hour trade in this 1 minute. Let's pretend we just close it at 2 hour. Once that hits that low there, or breaks that low, we'll close this. There you go. So that's that trade close. So our hypothetical 2 hour 1 minute trade is complete. So I'm going to delete this. Now what are we going to do? I'm going to move to the 5 minute. Next question. I'll delete this fair value gap as well. Are we going to close below this low? See, because if we get a big wick here, we could break these highs. Okay, guys, so look at this. We've had a wick down. Have we had a close below? No. So wasn't it a good idea to get out of that 1 minute trade short? Yes. Bank 2 hour. Now, let's say we're considering the 5-minute trade. This here, this candle is quite bullish. So it's going to close in 1 minute 38 seconds. If you see on the right hand side here, I have a countdown on my candles. So I know when that's going to close approximately. So if that's going to close green like this, it's more likely then to kind of, pull back and just continue higher. Because smart money may be taking these stop loss orders, buying as much as they can to push this thing higher. So there's no displacement. And I did a lesson on displacement. Check that out. So if you're looking for a market structure shift, you need to see displacement. There's nothing here. To me, it looks like this is going to go short on the 5 minute. But let's see how this candle closes. So there are benefits to tape reading, guys. Watching my videos, watching other people's videos online cannot beat watching the markets and studying it closely, how price moves. Okay, this is looking a little bit better. Another thing to bear in mind as well is we have a fair value gap here. See that? On the 5 minute. So price just bounced into that. So that could also be a location where price can be propelled higher. Okay, so we've closed below this area. This fair value gap here, the fact that this is here, I'd like to see nearly bigger displacement. Although we could have a nice move lower. I'll just delete this here for a moment. So if we're looking at this, we do have a fair value gap now above market between this candle is low, this candle is high. And we'll call that a fair value gap short. Boom. Now I wonder, will price come up here? Let's take a hypothetical short trade here. Okay, it's hypothetical. Let's say we don't want to risk any more than 10 pips. So if we're risking 10 pips, we want to make 20. Let's have a look at the 15-minute chart. Interesting. 30-minute. Spike higher. Nice down candle. 1 hour. Back to 5 minute. It'd be nice to see this 5 minute candle close below this 5 minute candle. And below this fair value gap, even better. Dollar index moving higher. Euro dollar moving lower. This is going to be a long video. I'm not going to edit it too much. because it's important to feel the speed of the market move. Let's pull a Fibonacci from high to current location low. That 50% is within this fair value gap. So this is a good sell location. We've had a liquidity sweep above market. We've had price break lower. Market structure shift. We're ticking boxes. We have a fair value gap above the market. What's the draw on liquidity? Where is it going to go to? Let's have a look at a 15-minute chart. It's a high-risk trade. It was a very strong move up. You can see we've got a 15-minute fair value gap there. Price could come up and try to fill all of that potentially, so you want your stop loss higher. 5-minute. We're bouncing here of this fair value gap long. We could shoot up and take out the highs. Personally speaking, if I took that first trade and I got 2-hour return, I would not take the second trade. I'd be done for the day. And that's the psychology of knowing when not to trade, knowing when not to push it too much. Is this a greedy trade? Is this one that may fail? So what we'll do here is we'll take our hypothetical trade, right? So we've made 2-hour in the first trade. We'll take this trade, hypothetically, and if it wins, we make 2-hour. If it loses, we'll make 1-hour for the day, hypothetically. So the entry is going to be just above this candle's high, maybe a pip in there. Half a pip. Just there. Stop up here, 10 pips. Looking to make 20. Let's see, does the market provide us with this hypothetical tape reading short trade? Okay, guys, so price has just moved up. Has it tapped us into this trade? I would not say so. Okay, so if we were to have had an order here, it would not be hit. It might be hitting this candle though. So this is our hypothetical trade short, risking 1-hour, stop up here to make 2-hour on this Friday the 4th of August tape reading exercise. Okay, so price is just pipped in here. So we're technically in this trade short, this hypothetical trade short. And what are we looking for? We're looking to make 20 pips. Get out down here, stop above the high. So let's see if this 5-minute trade works for us on this tape reading exercise. And then we'll leave it at that and we'll finish up the video. So you can see now with this hypothetical trade entry, if we were to go short, we're definitely in the trade now. Stop 10 pips higher. Now, as I mentioned, I would not be taking this second trade if this was me. I would have stopped trading for the day once I get the 2-hour. But just for experimental processes, let's see what would have happened here if I took this, what appears to be a logical trade short. Will it hit my stop, potential stop, or will it go to target? Would you be nervous if you were in this short trade right now? And if you think you would be nervous, why is that? Let me just mark up. We have a fair value gap here, remember, between this candle's low and this candle's high. So this is a fair value gap. But also, we had a fair value gap below the market, see? So this could be the fair value gap that pushes us higher and takes out the highs. And this is what could happen here. It looks like we're going to break the highs. Let's have a look at the 1 minute chart actually. So here we are in the 1 minute. Right now it looks like she wants to break higher. We didn't get an aggressive move off this fair value gap, did we? We've also made a fair value gap here on the long side. So just try to imagine you're in a long trade. Would you be holding the trade? You still would hold the trade here if you were long. The price moved up. There was a fair value gap here. It moved higher. Fair value gap left open. Moving higher. It looks like we're definitely going to take out these highs here. It's 10:23 a.m. in New York. So price would have come close to the stop loss here. But maybe we're just dipping into this fair value gap long, see, for a move higher. Or is this turning? See, we can't always know the answer to this question. We can only know the probability. As long as we're above this fair value gap, bodies closing above the low of this fair value gap, most likely we're going higher. If we get a body close below this fair value gap, potentially we could move lower. So it's like, if this happens, then this is more likely. If that happens, then this is more likely. That's the way you have to think in probabilities. Now, usually, if I was taking a 5 minute trade, I would have my stop above the high, the absolute high. In this hypothetical trade, I just gave it 10 pips, but the 10 pips didn't cover the high. So this would definitely not be a trade I'd be interested in taking. But let's see if it hypothetically works out. So what's happening here on this 1 minute chart? Let's look at it. So we've had this little fair value gap here. We've kind of closed below it. Price has spiked up and rejected it. So it's looking like price may want to move lower. We're in the location where our entry point short was. So we're around break even at this point on this hypothetical trade. There are some order blocks here. So price moving up, pull back into order blocks. It's very hard to tell. Let's have a look at a 5 minute chart. What do you think, guys? Are we going to break this low? Or are we going to break this high? It looks like it may be the high. Back to the 1 minute. Oh, I think we're breaking the high. Boom. So there you go. This would have been a 1 hour loss on this hypothetical trade. So 2 hour in the first trade, minus 1 hour in the second trade. If you did both trades, you would be plus 1 hour. But as I mentioned, if I get 2 hour on my first trade, I stop trading for the day. So you see how sometimes trading more, pushing it too much, can actually, you're shooting yourself in the foot. So if you get a 2 hour trade in one day, leave it, come back the next day. If you've got this far in the video, you're obviously someone who's quite serious about trading. You want to tap yourself on the back and congratulate yourself, because I know it can be very boring, but this is what trading is. Tape reading, analyzing the market moving, and you can learn a lot just by doing this. And do this exercise. Play some hypothetical trades, see that it works, see that it not work, and that can definitely help you in your trading. So thanks for watching. Hope to see you all again soon. Have a lovely weekend, and bye-bye for now.